Hey everybody, Christian from Treasure Town here, and today I just want to have a quick conversation about the economy, interest rates, and the impact that has on the collectibles market, and some things that I'm thinking about and would be curious to hear your opinions on. So I think that the bottom line, I try to give my opinion and then talk it out, and it's not necessarily perfect or could be totally wrong, and of course it's not investment advice. But my opinion is that higher interest rates are not a good thing for rare coin values, especially towards the higher end of coin collecting. And I'll explain exactly why. There's probably a few cascade effects that it could have. On the other hand, there's some potential upside with a sort of just problematic overall macro environment. So the first thing to talk about is that rising interest rates, when they are much higher, the cost of owning rare coins and collectibles is effectively much more. Because if you think about it, if you have a $100,000 coin and the interest rate is 1%, then it effectively costs $1,000 every year to own that coin. Now that might well outweigh the additional increase you think that coin is going to have. So say you think every year it'll increase 4% in value, then maybe the increase is $4,000, you're paying $1,000 to own it effectively, because the idea is that you could be putting that $100,000 into fixed income instruments that would give you 1% yield. But when the interest rate kicks up to 5%, all of a sudden that $100,000 coin effectively costs $5,000 to own because you're not using that. And so maybe it's outpacing the growth, and that's actually maybe a counterpoint for something that we'll talk about later in terms of the growth in the value of the underlying collectible. And this is actually an issue that is a reason that something like silver and gold go down if interest rates go up. Now, if people think the economy is going to fall apart or the dollar is going to get much weaker, then gold or silver make more sense, because maybe even though they're not spitting out money in the form of interest payments that a bond might, they are going to be a better store of value. And so the question is, where do coins and other types of collectibles fall in terms of the retaining, preserving, or even increasing value in a higher interest rate environment? And so there's not really a ton of data that I have or didn't have the time certainly to do a ton of in-depth analysis on exactly what coins have done at different points in time. And I think the other thing is, the high-end coin market, it can be massively impacted by, 2 or 3 people who want to spend a ton of money on coins. There's not that many coins to purchase. And that especially is true when you're looking at world coins and ancient coins versus something like US, where there's just a wide volume and huge sort of market size where, putting $10 million into all US coins, will marginally move up prices a little bit across the board if it's totally new money. $10 million in collecting, Roman provincial rare coins, or collecting coins from Thailand, that's going to have a massive impact just when you think about how much supply there is overall. So that's the interesting thing to weigh here. But I do think that it's an issue, when you have a coin that's selling for $10 million, I'm trying to do math and not be wrong, but 1% interest rate is maybe $100,000, 5% is $500,000. And then if you're putting it into different yielding, or maybe you think interest rates will go up, maybe if it's 10%, that's $1 million a year to own the coin. So then there has to be either rapid appreciation, or you're going to want to sell the coin so that you can put that money into things that are going to generate the cash flow. And that's probably one of the fundamental issues with coins. Now, on the other hand, the other side of the picture is that people who spend their money on coins, for the most part, and then I'll also address the point of, right now I'm talking about collectors. There's also a bit of an issue with rising interest rates and dealers that is a cause for concern. So yeah, the collectors are probably not spending money that they want to have invested in stocks. I think a lot of people might put that and do more of this with like gold and silver, where it's more of an investment, and even then it's often a hedge. But when I spend money on a coin, or when I continue to own coins in my collection that are worth a fair amount, that I've been owning for a long time, I'm not really putting that into my investment decisions, and I'm not sort of viewing it as an area that I'm not generating any investment yield on. So maybe all of this is a moot point. On the other hand, if there's like sort of general sentiment in society that like, okay, maybe it's not a great time to be spending tons of money. You know, I think we've seen that in sort of how the attitudes of tech companies, for example, how they're, and general corporations, it's almost been like a fad where all of the companies are focusing on efficiency. Likely they should have been focusing on efficiency for longer, but it's like something that everybody's doing. So maybe people are sort of organizing their perspectives on things. And so as a result, if there is some selling, especially of higher end items, and there's not a ton of people and collectors and dealers, because I think dealers are a really important part of this equation to absorb the sales of these higher end coins, we can see some significant downward price pressure. And I'm mostly talking about higher end coins, but it also applies to sort of, a $5,000 coin. I don't think that too many people think about a $40 coin and they say, well, I could be putting this $40 or this, even, $1,000, maybe it's a difference of $20 to $50 or something. 10,000 is $200 to $500. Maybe, I think it's more for like larger collections, and then also larger inventories. I think that that's a really big thing that people probably think about. Though you need it to, again, this is very much of a thought experiment video. But my point is that if 2 or 3 buyers come in and start spending a lot of money, then that can really increase prices on high-end stuff and bring up maybe the middle end as well. But if those same people decide that they need to be using that capital differently, and they start divesting of what they purchased, that can massively bring prices down. I don't think that we've seen a really bad coin market for a long time, and especially if interest rates continue to kick up, I think that this could be an issue. And then the other part of this is that also dealers are going to have to contend with this. If you have a $5 million inventory of rare coins, and you're a dealer, this is like something that definitely could exist. The difference between 1% and 6% yield or something on $5 million could be, I'm pretty sure off the top of my head, that's like $250,000. And there's not a multitude of coin dealers who are making $250,000 every year. And so you could see a continued pruning of different types of inventory. I don't think that this hurts sort of, again, sub $50 coins or sub $100 coins really at all. Though you could see it, I mean, bulk deals and marketing if there's less demand. I actually, though, tend to think that the lower end stuff, I don't think will massively spike in value, but can hold, when inflation happens, if you have a $20 ancient coin, and that's what people are paying retail. Maybe on eBay, people try to get $40 for it, but it's really a $20 coin, and it's a well-identified 3rd century Roman coin that has nice eye appeal. I think people are going to say, okay, well, maybe inflation's happening, and $20 is like foregoing a lunch or a drink at an expensive bar or something. Then why would you? That's not like the sort of thing where people are cutting back on. But when it's these much larger sums, I think that there is issues. And then for dealers, again, large inventories may want to prune some of that. There's also a fair amount of coin dealers because of a successful, and I should make a video on this, but a lot of the successful coin operations need a ton of capital to be operating off of. So maybe that looks, just to make it worth spending the time. Because if you want to be a full-time coin professional, you're going to need to put, you're going to have to do enough scale and volume where you can make, if your model is making 10%, you can't be doing $100,000 of sales every year. Even if you do, you might need to do like $1 million. And it's going to be a lot tougher to do $1 million of sales if you don't have $200,000, $300,000 of inventory at all time. And then you're really working hard to turn that over a ton. So I think a lot of coin dealers, whether it's bank loans or various credit facilities that they have with other companies, a ton of coin dealing revolves off of debt. And so as that becomes more expensive, either people start, if they mess up, say they grade a bunch of coins, they buy some fake coins, or they buy some coins that grade poorly when they send them in or crack them out, there's already a lot of ways that people run into a fair amount of trouble. And then if you have all of a sudden, they used to be paying 8 or 10%. These are coin businesses are risky businesses where credit quality is going to be low. So people are going to charge high interest rates for people to borrow, and that probably will be a function of where like the regular interest rate is. So say you have somebody in a zero rate environment paying 8 to 10% to trade coins, and then rates go up to 5 or 6. Well, all of a sudden maybe they have to pay 15%, and that's like a credit card, super high yield, and people can really run into trouble if they're not able to generate enough profit. We may see people sort of ebb and flow, but get a little bit less into dealing, and that could have a cascading effect where there's less dealers. And I believe that a lot, not a ton, but a fair amount, because there's a ton of genuine collector interest, but there's also, I think especially on the more expensive stuff, a lot of it is like sitting in dealers' inventories, or it's in dealers' inventories generally, as you have people that go out of the market and there's less participation, that can continue to push prices down, which maybe again hurts people that have taken out a ton of credit. Maybe all of this is totally wrong. I think the other thing to think about again is going back to collectors. Most collectors probably don't view it as they probably have. I would think when I collected and didn't do much dealing, I didn't really view it. I would like take it a large markdown in terms of how I'd look at like my stock holdings and my bond holdings and my cash, and then like the collection would be like maybe 25% of the value. My collection was like, okay, that's sort of like what I know is my collection value. So I don't think it necessarily means tons of selling from a collector's perspective, but I could see if interest rates go really high, higher end collectors who could use the money really well. If you have $500 million and values get hurt, maybe coins aren't down quite as much as some of the higher risk investments are, but then you see there are a lot of buying opportunities. Maybe it makes sense to sell some of your $500,000 coins, that sort of thing. Even if you get 450,000, then you can have an investment that goes up 2-3 times. That's basically the essence of this video, and it definitely could have, like, this could happen to no extent, but was something that I was thinking about, thought that it was worth discussing, and I'm curious what you think. How do you feel higher interest rate environment, maybe worse stock prices, higher yields would look for the coin business? Just stuff that's been on my mind. Curious what you think, and I look forward to hearing your thoughts in the comments.